there and welcome. Our Trading to Win development team has extended the functionality and usability of the TTW-MarketVolumePro version 2 indicator for Bookmap to a completely new level. In this video, I will guide you through the functions and usage of our TTW-MarketVolumePro add-on for Bookmap version 7.1. As always, adding an indicator to Bookmap is simple. Open the Configure API plugins, click Add, select the attached Java jar file and load it. That's it. The add-on becomes available in the API section and is ready to be used for all instruments, stocks, as well futures, for Rhythmic, and as well for the X feed and other data feeds. It runs on Windows, Mac OS and Linux. It starts calculating on every loaded instrument as soon as you start Bookmap and the first data comes in. The very first time when you load TTW-MarketVolumePro, you must restart Bookmap and to give the add-on the chance to connect to Bookmap's license server. Okay, let's have a brief function overview by opening the API plugins and clicking on the indicator or add-on. The settings section gives you the possibility to adjust to your individual and preferred color settings, as well as the volume decay time and the signal levels. Let's start here with the line color settings at hit bid. Hit bid indicates when sellers sell into bids. Lift ask indicates when buyers lift the offer. vDelta and buy stop run, indicated with its plus sign, indicates increasing buyers over sellers, and in case of stop runs, it indicates buy stop runs. vDelta / sell stop run, indicated by the minus sign, indicates decreasing buyers. That means increasing sellers are hitting the bids, and in case of stop runs, it indicates sell stop runs. The zero line is there for better visualization of buying and selling. Additional functions are Exponential Half-Time live second, which is set to 60 signal levels, which can be defined individually for each instrument. By that I mean futures as well stocks. Buy and signal colors as well, all colors in this panel are free adjustable according to personal preferences. Let's start to see these functions on the chart. I'm closing the panel here and starting the chart. Oh, I have to activate it first. I must activate, of course, by clicking and checking the add-on. When TTW-MarketVolumePro version is added to Bookmap's API section here, you will find hit bid, lift ask and vDelta stop run settings directly in the widget section 2. Here in this widget section over there. You can use the widget section as a fast access directly to settings, and you can activate or deactivate every function of the indicator separately. I suggest to leave them on, as you will see they will give you worthwhile and meaningful information about the instrument you are trading. Additionally, I recommend selecting horizontal bar display, this one here, to get the numbers on the left side of the widget section here, which is very close to the indicator lines. Let's talk about the functionality of TTW-MarketVolumePro, and the first one I want to present you is the hit bid function. For this reason, I would like to deactivate lift ask and vDelta here, so that we have only on the chart the hit bid, and activate start again. Okay. As all TTW-MarketVolumePro modules, it measures market or aggressor data. Again, it measures market and aggressor data based on incoming MBO, market by order data. In this case, I am connected to Rhythmic and the X feed. My presentation here is based on Rhythmic currently. Hit bid color is set to red as default settings because it indicates when seller starts to hit the bid side of the limit order book. Price always declines or drops when not enough bidder are in the market to support or to absorb selling. That's a simple mechanic of markets. If there is no one who wants to bid, then price deteriorates or drops. TTW-MarketVolumePro indicates in real time when sellers or market orders are selling into bids. Let's have a look at lift ask. The lift ask indicator indicates when buyers buy from sellers and start to lift the offer or ask. Lift ask color is set to green per default to give you a better visual guidance. With the support of buyers on the bid and market orders, which lift the offer, you see immediately in real time that buyers are in charge. That means price goes up. It is also perfectly visible in the display. You will see green line over red line, which means buyers are leading the market and thus price is rising. On the other side, when red is over green, then sellers are dominating the market because there are not enough buyers on the bid side to stop or support the price. vDelta. I think vDelta is the heart of the indicator because it includes several important functions you as professional trader should know and utilize for your trading. First of all, it is colored, and that gives you a fantastic overview over the market. With a blink of your eyes, you can see that market you are trading is dominated by sellers or buyers. This is shown by the volume indicated by blue or pink in the default settings. So blue here and pink there. In selling markets, you will see, how to say, pinker than blue areas. And the zero line is the boundary here. It oscillates around the zero line. Think in terms of traditional differential and integral calculus because it answers the question, how do you find the area under the curve? When you use the zero line as the boundary, you see curves above and below the zero line. This gives you a clear insight which market side is leading. In other words, it answers, are seller or buyers in control? Based on the replay, you see that the market is dominated mostly by sellers here. The areas and the signal lines are bigger than the blue ones. The pink lines are bigger, or the pink lines are higher than the blue ones. Sellers at this point are in control. Easy, isn't it? And very obvious. That will give you the confidence in yourself to literally see what the market is doing. No guessing anymore. One important point I need and I want to mention is that nothing in TTW-MarketVolumePro is average or smoothed. It purely calculates the incoming MBO data provided by your broker or data feed provider. Let's talk about stop runs. Stop runs are market conditions where algos are triggered by external or exogenous events. Stop runs sweeps through price levels either to catch stops and to reverse immediately or to drive prices up or down dependent on those events and new information market is gaining at that moment. Stop orders are traded sequentially, that means fast in terms of price and time, and therefore TTW-MarketVolumePro identifies those stop runs very clear and plot them as an nearly 90-degree line in the subchart. As a result, you can measure the volume traded at that levels easily. Now you start to see the advantage of having a hit bid and lift ask measurement or indication on your chart provided by TTW-MarketVolumePro. Let's have a look at a great example on this chart you see on your screen. Look here, we have had a stop run right here at this point. Okay, let's skip in time and wait, and I will fast forward to the stop run we have had to show you what we can do with the TTW-MarketVolumePro indicator in this case. As mentioned before, for better understanding, you can activate the show data tooltip as well all indications like hit bid, lift ask and vDelta. The stop run will come in very soon. I'll skip this video to save a little bit time. That was a very nice stop run, and we will have a closer look at that. I want to stop the recordings here, make it a little bit bigger for us to understand what happens here. And as mentioned before, stop runs are triggered by external or exogenous events, or algos are triggered at that moment. What we can do with a stop run when we see them, it is very nice one here, a very nice example is that it is really 90-degree. That is fast sequentially and very fast in time, so that we can see that very easily on the TTW-MarketVolumePro indicator here. Very easy to see. Now we know that was a stop run. But what can we do with this information? Now what we can do is to measure the volume traded at those levels here. Let me show you how I'm utilize this information for myself to understand whether this is maybe an end of this price move or a possible reversal or not. We'll activate both the hit bid and lift ask first. What you can do is to put your cursor, for example, this is the hit bid, that means the sellers are hitting into the bids, and there you see that a number. So it's the August the 4th, the timestamp, and you see the hit bid. A level indicates at the start or beginning of the stop run volume around about 214. Let's take this number 214. That was the start of the stop run, and let's go at the top of the hit bid indicator. You see and you can read the volume traded along this line, along the stop run, was 1,499. Excuse me, at the top you can measure the volume. It's a little bit hard to catch the top here. It's around 1,544. What you can do now is to subtract the number you read here, 240, and the number you catch at the top of this move, 1,544.38. It's not very exactly, but it gives you roughly an idea. In this case, I have a difference of 1,330 contracts traded into the bid here. But what happens on the opposite side? That's very interesting question. To read that and to understand that, we have to activate lift ask indicator here and also read the numbers. So starting here 197 at the top and 512, and that gives a difference of 315 contracts. So what we got here are two numbers, the traded volume into bids and the traded volume into ask immediately at the same time. You can see that there is no difference between the time. We have two calculations here. First, the number which hit the bid, it was roughly 1,324 contracts or orders transacted here on this price level, or swept to the price levels until here. And on the ask side, there have been roughly 315 orders transacted on the ask side immediately. If you don't want to look at hit bid and lift ask, you can switch it simple off and see the delta. The delta indicates the sum of the traded volume at that point, and that means we have roughly minus 18, and the top is 31, that means roughly 1,000 contracts here, and or orders are transacted on this stop run here. Okay, so far so good, but can we answer the question if this might be a continuation move down, or is this a possible reversal point? To answer this question, we should switch off the vDelta and measure the ratio between the hit bid and lift ask volume or traded or transacted orders. As I said before, here on this side there have been 1,324 contracts transacted on the hit bid and only 315 contracts transacted on the lift ask side. If you put both into a ratio, that means if you divide 1,324 by 315, you get a ratio of roughly 4 or 4.2 to be exactly. In other words, at that moment of time, there were not enough buyers which were in the position to stop the sell stop run and reverse the price. There were simply not enough buyers on this, on the opposite side, on the ask side, to stop the stop run or to stop this move, this sweep into 32.74. My research shows that at least a ratio of 2 is required to indicate a possible reversal, better below 2. Now you start to see the big advantage of TTW-MarketVolumePro for trading professionals. Understanding the principles of the limit order book in combination with the processed and visualized information, you can see if a traded or absorbed price level will probably hold or not. And by the way, you can learn more in my comprehensive seminar where I show not only how to reveal those points, but also how to utilize them in profitable strategies. Coming to the bid-ask imbalances. Another side effect watching and observing the markets that way gives you a better understanding of markets and how they act. Look at the example before. We have had a high red spike with measured roughly 1,538 orders and a smaller green spike with roughly 350 orders processed or transacted. Look at the difference between those both lines. Do you see the empty area? The empty area between red and green in this example? Do you see that both lines, which represents transacted volume at a certain time, are far from each other? The distance between bid and ask shows a so-called bid-ask imbalance. When transacted orders on one side, bid, are bigger than the transacted orders on the other side, ask, the market is out of balance. It is imbalanced. When you use TTW-MarketVolumePro in your daily trading, you will inevitably notice that all imbalances are going to be closed. And I'm emphasizing here consciously, all. All markets seek an equilibrium in their micro and macro structure. Short-term or day trading isn't an exception at all. Maybe you haven't had the tools or possibility to watch your market that way. Given that you are open and curious, you will start to use Bookmap and TTW-MarketVolumePro to explore what markets can offer you additionally on information for your profitable trades. For better understanding of market actions, signal levels discloses when buyers or sellers start to lead. Coming to the signal levels we introduced in TTW-MarketVolumePro version 2. For better understanding of market actions, signal levels discloses when buyers or sellers start to lead. That happens when you define a numerical threshold in the add-on settings. For example, my favorite is 100 for the ES future. When you activate it by checking the box in front of signal level, the indicator will start to plot arrows in your selected bookmap chart. One that might be helpful and supports the idea I mentioned before in vDelta when I said think in terms of traditional differential and integral calculus, because it answers the question, how do you find the area in our profession, in our terms, how do you find the volume under a curve? When you see more selling than buying errors, that means something. Look at the vDelta closely. You will notice that the areas of volume below zero becomes bigger and bigger. That means market is a selling mode and you should consider to sell, and of course vice versa. vDelta oscillates very often around zero line and sometimes even around levels you have set in the settings. That's normal because often market is neutral or indecisive and range bound. In this case, it is hard to following any indicator. Exponential half-time. You can also make the indicator, let's say, faster or slower. That helps you to adopt TTW-MarketVolumePro to individual liquid or illiquid instruments. Exponential half-time, measured in seconds, measures the time when volume decays, or mathematically spoken, it is the quantity of volume that still remains and has not decayed after time you have set. It is simply the half-time of decaying volume. Practically, you will see a different speed or length of vDelta here and lift-ask curves. It can be used to time signals for different instruments which trades with smaller or bigger liquidity. Values must be determined experimentally for each instrument. For ES futures, I found that a decay time of 60 seconds and a signal level of 100 is a good start. vDelta divergences. As a great byproduct of TTW-MarketVolumePro version 2 is his ability to spot delta divergences. Besides observing a limit order book to trade price and volume, TTW-MarketVolumePro is a real-time delta bid-ask indicator. It does provide insight into order flow that price itself might not reveal. Delta is a good way to chart the DOM action and make the whole level 2 absorption easier to read, and is especially, of course, less demanding to do so. Basic concept of delta divergence is to use it as an additional information in trading. Let's see one example in this recording. This recording is based on August 4th, 2020. You can see after a steep rise of the price comes to a break, a pause here. You see that very clearly. The volume traded is very high. We have some stop runs into this level, into this liquidity level. And what you can see now on this side is a divergence. The price is going up, but the vDelta is not following. That means there are not enough volume to spike over this traded volume here. That means the volume, the move comes to a stop because there are no more buyers at that moment. On time, there have been no more buyers to lift the offer, and that means vDelta is indicating a divergence. When you look at that point and draw a line to this point, you see the market is rising, but the vDelta is not following. And by the way, you see here very nicely what I talked before about vDelta, because you see that the volume is bigger on the downside. That means the sellers are in control at the moment of this events here. You see that very clearly with a blink of your eyes. You see immediately sellers are in, and it also indicated by the arrows here. Delta indicator by itself does not much mean. A lot of traders are relying on divergence without context. Based on my trading experience, it is important that a trader always overlays the action of delta into the context of price action at extreme levels, like mentioned before, like high liquidity, accumulation, or distribution areas. Taking it out of context will provide a trader just deceptive information. Thus, to use and read delta, always compare how much has delta moved into last minutes relative to how much has price moved. And also which direction. Are both delta and price moving in same direction, or is there strong divergence? For example, where price is going up slowly but delta is dropping. Now, understanding the usage of delta divergence thorough, you can use TTW-MarketVolumePro as a reliable divergence indicator. One last important part of our indicator is TTW-MarketVolumePro shows market velocity. It seems that looking at markets makes the question of market velocity, or how a certain market progresses in terms of price and time, obsolete or not necessary to watch. I think it's valuable to see how market progresses. Given market goes up, buyers are lifting the offer constantly, we should ask ourselves which volume is traded on the way up. Do we see a strong buying or bid support on the way up, or is the buying slow and supported by very low volume? We can measure that by using simple volume bars, of course. On the other side, we can have a fast look at the vDelta and bid and ask indicator on TTW-MarketVolumePro. You will notice immediately when market is supported by strong or weak buying or selling. That's an amazing and often ignored information market is telling us. Based on that information, we can conclude, for example, no professionals, institutional traders are around, market waits for news or new information, and simply it's not time to trade. Saying that, TTW-MarketVolumePro indicates very clear and in real time what shape the market is in. That information alerts you when something is amiss or not kosher. Let's have a short look at and summarize what I have presented here based on the replay and recordings of August 4th, 2020. You see very nicely here the stop run. The stop run you can measure, and as mentioned, you can measure if the opposite side is hit with the same strength or not. That means you can measure that by putting simply your cursor at the top or the bottom of hit bid and lift ask, for example, and also to measure the difference in the vDelta. If you switch off hit bid and lift ask, you will see that the sellers are in control. You see the line is below zero, you see the volume, the area traded here. It's much more sellings coming in and traded here in this area, and that price is here between 92 and 86. Then there have been buyers. And you see also nice divergence, which comes in here and ends here. So if you put all in the context, you see that this is a good selling area, also indicated by the arrows here, because you see more pink arrows than blue arrows coming in. Now the market flips over to buying. You see that more buyers are comes in. So the green line is over red as well. That means there's a nice buying opportunity to go with the flow. You see more blue, you see more blue arrows than pink arrows or selling arrows. Everything is indicating a buy, and as well, when you switch back to the vDelta, it's a little bit faster. Yes, of course, not to waste your time, but when you look, we have had here sellers, we now know flipping to buyings. The market is going up, and if you find a nice, decent entry point, you can simply ride the market until the next liquidity levels. Now this was a sweep or a stop run into this liquidity level here. Market needs a break after each stop run. It retraces. If the market wants to buy, they are lifting the offer. Now you see what I mentioned before. It's a little bit more selling here because of this traded volume into 95. For sure, it takes a little bit time for the market to recover from this huge absorption at the 95 level. But you also see very nicely that the market is now in a selling position, indicated by the pink curve. And buyers are gaining the area, the pit again. Here they're coming in and trying to hit this 3300, which was a target hold all the day for this market. Also stop run here. You see a nice stop run here into this area. Again, selling dominates at the moment. You see that very clearly because hit bid is over the lift ask, and as well you can see a bid ask imbalance here, and that means the market comes to a stop. The market will stop here. Then it either break to go further down, to rebalance as you can see here, and to go further down or to sell, or the market needs time to rebalance, and then it depends on the market conditions. The buyers are coming back and lifting the offer. The market velocity, you see that here on the vDelta very clearly, is in favor of buyers. The market velocity is in favor of buyers here, very, very clear. Market velocity goes up, the market goes up. That means this is also a nice divergence between this point and that point here. If you draw a line here from this to this, from this point to that point, you will see a nice divergence, and that means you can take a long position at that point and you are supported by the buyers. You see green is over red. As well, the vDelta as a result of bid and ask is going up too. It's blue, it's blue, it's blue. That means you are in the buy position here. As well, nicely indicated by the arrows if you need this help to get a little bit more confidence in what the market is doing. Very nice stop run here. You can use the same methodology to see what is traded, how much is transacted at that point, how many orders are transacted at that point. You can define it very, very closely, that you can see it immediately what happened here. And as well, a very nice position. Let me stop that here. Very nice indication. Stop run, divergence, lower volume here. And now at that point the market goes up, but that means buyers are lifting the offer and started to lift the offer here from that point. They are starting to dominate the market with buyings. So you see with the one very brief view on the chart, with the help of TTW-MarketVolumePro, in what condition the market is. A stop run, a sell stop run, very clear, with a decent nice amount here, about 238 until up to, very hard to read here, 1,800 contracts traded here, roughly 800-900 contracts or orders were transacted on this point. So the market recovers. It takes time to find a new balance, as well indicated by this huge bid-ask imbalance here. You see the space between the bid, hit bid and lift ask indicator. That means the market will come to a stop or to a break, and then at that point buyers simply overweight the sellers here. That's the indication. Buyers do overweight the sellers. TTW-MarketVolumePro is developed for professional traders for trading professionals. As a professional trader, we know how important it is to give you the best tools and education you need to become a sustainably profitable trader. TTW-MarketVolumePro version 2 can be licensed for your individual Bookmap license on Bookmap Marketplace as a lifetime or one-time charge license with free updates lifetime. User support version 1 are entitled for a free update. Please go to Bookmap Marketplace, and after you logged in, you will find version 2 in your download section. We see in our trading room every day that TTW-MarketVolumePro gives us an edge in observing and understanding the markets better than other tools promise you. Test it 7 days for free. However, every indicator should be treated as supportive and not decisive. You should know your context and your instrument and use the indicator as an additional indicator to execute your trades. All links you need to get our indicator are below the video. Thanks for watching, and I'd be happy and motivated to post more videos and educational material here when you leave me a like. Thank you and take care.